Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to talk about one healthcare company. I was doing a research this morning trying to find another company that I could add to my portfolio from the healthcare side of things. So I do own J&J, I do own Medtronic, Merck, as well as AstraZeneca. But I do feel these companies have one thing in common, and that is whether we're in recession or not, their products are absolutely essential to us. And for that reason, I do like that predictability sort of an income. However, having said that, some of these companies are very fragile, especially when they have a patent that runs out and so on. So I was doing a bit of research and I found basically a company called Abbvie. We talked about this company before. And I thought, you know what, instead of just doing the research myself, I thought I'll share it with you, just kind of give you a quick overview of some of the things that I found, because I thought this is a really interesting company after doing a little bit more research. It's a Sharia compliant company. So I just thought, you know what, let me share it with the community. Before we get to look at the company, I just wanted you to point out the fact that we have a Patreon account where you can sign up. And then if you get access to that, you can get access to the Discord, okay, where we're trying to build the brothers and sisters who are very much like-minded, who can help each other and contribute to the discussions and everything else that's happening at the moment. Okay, it's growing, alhamdulillah, so we're trying to build that, inshallah, and I want us to share good practice, and that's the whole purpose of this, okay. For whatever reason, the overall markets are up again. It looks like the US, the Fed is probably going to pause for a bit and then maybe add to basically increase it next to basically in this month. They might actually pause it, they might increase it, but right now, according to a lot of the analysts, they're coming out, they say in terms of interest rate, it looks like the Fed will actually pause, which will help the markets and so on. We'll see what happens, but in the end of the day, the most important thing for us as a long-term investors is that you find companies that are undervalued, that will add value to your portfolio in the long run, and just dollar cost average every single month. And that's what we're trying to do, and that's what I'm trying to do. So like I said to you, the company we're talking about today is Abbvie. Is a biotech technology company. As you can see, it has a price right now of $137 per share. I do remember seeing this company when it was below 100. I think just when COVID started, I think it was $110 per share. Basically, the 5-year return for this company is almost 40%. Current EPS is $4.24. It has a market cap of $243 billion. It has a narrow economic moat, and beta is very, very low, which is very nice, because then that means it's not too volatile when the markets are down to a lot. Okay. Now, in terms of EPS, in terms of EP, okay, not EP. In terms of the PE ratio, sorry, I can't even talk. It seems very, very cheap in comparison to the sector. The sector right now is almost 28. This company is trading right now PE of 12. The forward PE is 12 as well. The 5-year average is okay. It's basically 10. So that means maybe a little bit expensive, okay. But in comparison, relative to the sector, it seems a little bit too expensive. And price to free cash flow, we're looking at about 10. So yeah, it might be a little bit overvalued right now. But let's have a look at what the other analysts are saying, okay? But this is where this company shines, okay? In terms of dividends and free cash flow, 4.3 dividend yield. Okay, 4.3% dividend yield. The payout ratio is 44% only. The latest increase was 5%, and the 5-year growth rate of 17%. The annual payout for this company is $5.92, which is quite a lot. Dividend growth streak of 51 years. This is a spin-off from the Apple Laboratories, and they obviously carry on their dividend growth streaks from there onwards. Okay, it's a relatively new company, but because they are spin-off, they've carried on. Okay, dividend safety is 70%, which is really good. And look at this free cash flow, $23.52 billion of free cash flow right now in the bank. That's money they can use to pay us more dividend, buy back their own shares, reinvest in the business. Okay, and free cash flow yield right now, we're looking about 9.6. We're normally looking about 3. And free cash flow margin, we're looking about 41%. Instead of like the 5% that we're normally looking for, just about 5%. So that's absolutely huge. The fact that the dividend is quite low, as well as this type of free cash flow, is absolutely amazing. The profit margin right now is about 13.3, and in terms of operating margins, 28%, return on equity almost at 50%, Total return in the last 10 years, we're looking at about 15%. Basically, return on invested capital, 20%. And revenue compounding annual growth in the last 5 years, we're looking at about 17%. Okay. Current ratio is spot on. It's just 1, which means the company has enough basically to cover their current liabilities if they need to. The growth estimates for next year is 1%, and then after that, every single year they're expecting it to basically decline about 3.81%. So this is on the average. So I will show you a breakdown of what the analysts expect each year in a second. But the next thing is the price. So right now it's 137. We've seen that already. According to Morningstar, it's about 17% premium. They're saying it's about 120 per share. That's where intrinsic value of the business lies, right? But according to Simply Wall Street, they're actually saying it's about 43% undervalued, $245 per share. So they are very, very bullish on this company. But when it comes to TipRank and Seeking Alpha, again, they're more or less on the same boat. Okay, basically about 20% each upside, $167, $165 per share. And I think this is more realistic. Okay, what if it comes down to 120? That would be absolutely amazing. But this is more, I think, more realistic. So about 20%, even 10% upside, whatever it is. Okay, but obviously, like you know me, when it comes to Morningstar, I follow them a lot, and I think I'll probably, if I were to initiate, basically buy on this company, I'll probably wait for it to come down maybe a little bit and then have a little bit, so hopefully that will give you a little bit of a margin of safety. In terms of Sharia compliance side of things, is absolutely fine, no issues. Now in terms of interest bearing debt, that's the one that you need to worry about, because it can easily change. It depends on the company. If the price goes down, okay, if the price goes down, obviously this will also basically go up, and that is basically something that you need to think about. Although I'm currently looking at another, I'm putting together, by the way, I haven't actually shared this with the community, but I'm putting together a kind of ebook that hopefully will help new investors and old investors as well. So I'll let you know, inshallah, when that is ready and finished. And one of the things that I want to talk about is basically this idea of Zoya is not the only way of basically doing these things. There are a couple of other ways that I want to share it with you guys. When it comes to shares outstanding, right now we're looking at is all been all over the place. Okay, they have been buying back their own shares and then increase it and then buying back their own shares, but right now they haven't actually bought back any shares for the last 3 years. So it looks like maybe it's going to stabilize and then maybe start buying back their own shares. I don't know if they have initiated buyback recently, but that could be the case because they have a lot of cash. I think it was about $23 billion in the bank right now. Now let's have a look at let's use Seeking Alpha right now and have a look at a little bit more details. If you look at the analysts and what they're expecting about the company, as you can see here, this person has actually said it's a buy. But Humira is basically their drug that is running out of patent this year, I think. And when that runs out, that means other companies can now copy it. Okay. And when that happens, they look, obviously now the market share basically is now wider. So a lot of people are now getting involved. The likes of, Pfizer might get involved and other companies like that, for example, right? So for that reason, I think that's one of the major reasons why there has been quite a bit of a decline in them in terms of their business, because it's down about 15% a year to date. For the 1 year, it's about 1% down. Last 6 months, 16% down. So it's probably a lot to do with that. If we look at the earnings, and this is what I want you to show you guys. Okay, if we look at the EPS, earnings per share of this company, there is supposed to be a decline this year, 20%. And that's a lot to do with the fact that the Humira basically drug is no longer just their own. There are other companies that can copy now. They probably started selling it already, whatever, right? But after that, it's going to grow back about 1%, then 9%, then 8%, then 11%. So only if you focus on the first 5 here, up to here is about 2027, they grow in the business double digits. So if you are a long-term investor and you see this sort of a thing, and again, this is pharmaceutical companies and these things do happen. They go up and down, they lose their patent, and then they have to wait for a few years. And the next thing we need to look at is in terms of is the revenue, right? So again, as you can see there, this year there's a bit of a decline. So December of 2023, there's basically about 9-10% decline, and then after that, a year after, okay, there's a bit more decline, and then after that it picks up 5%, almost 5% again, another 5%, another 5%, based on these analysts. Again, this can be True, this might or might not happen. And again, remember, these companies are very innovative. They might come up with some drug that we haven't even thought about. Remember what happened with Eli Lilly very recently. So that sort of a thing can easily happen. And if they invented something new completely, or a new drug or something that helps with cancer, whatever, they can easily change these things. Okay, so anything can happen. Anything can happen. Just as an investment, this is why we always say it's risky, and you really have to be careful with these things. Okay, so that is the company that I wanted to share with you guys. And the final thing I want to share with you in terms of ratings, as you can see here, Seeking Alpha is actually saying as a hold. The Seeking Alpha quant system is actually saying as a hold, whereas a Wall Street basically right now is saying as a buy. So what am I going to do with this company? I'm going to do a little bit more research, find out in terms of their drugs that they sell, what patents do they have, how many of these things do they have in the pipeline, what is basically other people that have invested in the business have said about this company. Also read these articles and find out a bit more information, and maybe these people have got a lot more knowledge than I have in terms of that industry, if you like. Okay, and then for now, all I'm going to do is add it to my watch list. So I'm going to come down all the way here. You can get access to this if you join us on the if you join us on the Discord, you can get access to this. Okay, so Abbvie, just put the ticker symbol here, and then basically all of this data gets automatically updated, and then all you need to put is your target price. So I think Morningstar said is 120. You can do average, by the way. You can take average out from the three companies that we just looked at. This is what I mean. Okay, so you can look at the average and take average from these three companies. But if I go with Morningstar, which I have been doing so far, so 120. So 120, and then possibly 5%. There we go, 5% margin of safety. Basically about $6 less than what it is supposed to be, is $114. Now it's 138 right now. 114 might be a little bit unrealistic. However, I can do average, I can do anything else. So if I said, for example, let's say 125, okay, at a list is 118. I can wait. I can just wait until it comes back down to that price that I'm looking for, and leave it alone for until then. So that's something that you can easily do. And by the way, you can get access to, all you need to do is go to file. Once you've got access to it, make a copy. Okay, make your own copy, and then you can change all of this data. I hope you're enjoying this type of videos. I just wanted to share that with you guys because I was doing the research, and I thought, you know what, this might be a good one to share with the community. I'm definitely going to be in my watch list, and I will see how things are. Overall, the portfolio is doing well. Okay, today the market is up. We've now crossed the £75,000. I'm getting some dividends as well. Like I've got, I think, 40 something pounds from 3 a.m. today. Okay, so things are going, alhamdulillah, well so far, but they can change, as you know. We might go back to the red again soon. It can happen. Okay, but the way things are right now, everything looks like, especially technology companies, everything looks like it's going to the moon. So we'll see how that goes. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.